we've had 6 days where we've had 70% positive stocks, right? That doesn't happen that often. It happens near bottoms of markets generally more often than not. So we are seeing some positive kind of momentum underneath the surface, and we're certainly seeing some buyers coming into the markets here. We've got to break above this resistance level, and then immediately above that, we run into all this cluster moving averages. Don't expect this market to necessarily crash, and don't expect it to go running off to the moon. We're probably going to be stuck here for a while in just a big kind of grinding range that's going to just be very frustrating this year. But here's what you need to know before the bell this morning. Yesterday, decent day, had a second day rally. Markets actually got back above the 20-day moving average. So this is the first kind of positive sign that we've seen here for a while. We tried to do that, just before Trump came out and announced the original tariff, the original tariffs, right? Those big, ginormous trade deficit tariffs that really kind of cracked the market. So, we're now trying to form a little bit of a bullish move here for the markets. We've cleared the first level of resistance. That's going to get you back up to about 5,600 if right, we can maintain this. Now, markets are looking to open a little bit lower this morning. So as long as the markets can maintain about 5350 today, maybe even end on the upside a bit today, that would certainly be an encouraging sign here for the markets near term. We are going to run into a lot of resistance, well, not a lot, but we have some decent resistance here coming up at these previous bottoms and these tops that just run right there. And of course, this was where we had this big giant 9% rally in one day that petered out right at that resistance level. We've come back down. We are potentially setting a series of higher lows here. This is also bullish kind of in the near term for the markets. Markets are finding some buyers here, regardless of kind of the headline risk and everything else that's been going on. We're seeing some buyers coming into the market. So again, stepping in, we've had 6 days where we've had 70% positive stocks, right? So again, just that doesn't happen that often. It happens near bottoms of markets generally more often than not. So we are seeing some positive kind of momentum underneath the surface, and we're certainly seeing some buyers coming into the markets here. But again, we've got to break above this resistance level, and then immediately above that, we run into all this cluster moving averages. So that's kind of my point that I've been talking about here for a while, is don't expect this market to necessarily crash, and don't expect it to go running off to the moon. We're probably going to be stuck here for a while in just a big kind of grinding range that's going to just be very frustrating this year. And particularly when you've had a couple of years in a row where you've had 20% gains, it was super easy to make money. This is going to be that year that's just super challenging for the most part. And for the next few months, we could just be stuck here for a bit. Now, again, I think probably as we get to the end of the year, we get some relaxation, get some clarity on trade, get some clarity on tariffs, the market kind of starts to heal up a bit. But again, between now and then, this rally decline thing may very well be with us here for a while. It's going to be frustrating. It's going to be difficult to make money. But again, this is just one of those periods we're just going to have to navigate through without making really big, emotionally driven mistakes. Being too long, being too short, whatever it is. Markets are likely not set up for a major crash. They're also not set up here for a major rally. Again, that's going to be the frustrating part. You're just going to be stuck here for a bit and just have to kind of navigate through this. Outside of that, we take a look at what's been going on as well with crude oil prices, because this is kind of one of the big drivers for inflation right now as well. Oil prices feed into inflation, but demand drives oil prices, right? So as the consumer slows down, that's going to start to continue to weigh on oil prices. And oil's had a very nice little rally here. We've gotten up back above the 60 range. We'll see if we can hold on to this level. But again, it's running into a whole lot of overhead resistance here that's going to probably keep oil prices pretty well contained here near term. And this certainly suggests that two things. One is that inflation is going to continue to be under downward pressure, but also economic growth is certainly not showing up here, right? We're not having, kind of evidence of really strong oil demand within the economy. That's certainly not suggesting you have really strong, robust rates of economic growth. Again, these aren't recessionary levels of oil prices, but watching oil prices tells you a lot about the underlying economy. So again, just paying attention to that will also kind of help you kind of navigate what's going to happen here over the next several months. But that's what you need to know before the bell this morning.